We're back. Let's do some calls of the day. Shake Shack and Starbucks, because both were reiterated overweight at Barclays. Josh Brown owns Shake Shack, as you know, and Starbucks is on his best stocks list that he pointed out once again yesterday. Josh.
Yeah, so consumer discretionary stocks in general have not held up well because the consumer, the survey data at least, has been coming in weaker and weaker, and a lot of downside surprises. And these stocks get hit. So Shack is down 7% over the last week, 20% over the last month. But nothing fundamentally has changed with its business. And right now it's selling at an RSI of about 30. So relative strength at 30 or lower is considered pretty oversold, not an area where historically it's great to be liquidating stocks. That being said, it's kind of trendless. I wouldn't say that this necessarily represents some sort of like perfect opportunity because it could chop around in this zone for a while. So I'm a long-term investor. I'm not terribly focused about what happens over the next week or two. I know people are. So I wouldn't say like, yeah, this is a layup, buy it right here if your intention is to trade it. If you're an investor, I love it here.
All right, let's focus on 3M, which has been named a top industrial pick at UBS. As they say, it is one of the most compelling non-volume driven profit improvement opportunities we've seen in our 20 years of covering industrial companies. They like the CEO. Hitting all the right notes, they say, is going to translate to revenue growth acceleration in each of the next 3 years. Josh, take that one, and then Rob, you on it as well.
Look, I think that we're in this place now where so much of what's happening with these stocks is about sentiment and people trying to anticipate some sort of massive cut to earnings, which we really haven't seen for full year estimates. So the best thing I could say at this moment is you take a situation like this and you have an opportunity to buy something that has been maybe not all the way de-risked, but somewhat de-risked by the fact that people are shooting first and then waiting for this other shoe to drop. And it may, but it just hasn't happened yet. So that's the way I'm looking at not just this, but a whole range of situations out there in the market.
Okay, Rob?
Yeah, I'd say welcome to UBS. Glad you're here. We bought it at 12 times, now trades at 19 times, more fully valued than it was. We bought it for some of the same reasons that Josh talked about, Stephanie talked about on the show, the new CEO. They are demonstrating that they can change their business. It also highlights the benefit of thinking about buying names that are a little less expensive and they have a catalyst to change the business. That happened in IBM. We happened to buy this on the same day. And, those two stocks have really performed. They were cheaper ways to play in a market that was expensive and frothy.
Lilly and Gilead, which are yours too, reiterated top picks at JP Morgan today. What do you think of those?
Yeah, both positive year to date. Gilead, you had to wait a long time to get the performance out of this name. You had to be patient, but ultimately being patient paid off. They're seeing a lot of acceleration in their earnings fueled by their HIV platform. Lilly got expensive, and we reduced it. And, we're at a more normalized rate. We reduced it at 50 times. It's trading at 35 times. We're still overweight because we believe in the GLP-1 franchise, and recent announcements around the broader distribution of Zepbound, kind of lends support to this.
Right.
They're going to have pretty big revenue growth over the next 2 years.
Staying in healthcare, United Healthcare Weiss price target got cut to 600 from 650. They still like it at Mizuho. Yeah. They say it's an outperform, but they no longer believe the company can trade at prior multiples given the market volatility. Is that a fair assessment?
It's fair assessment near term, right? Because there's uncertainty about Medicare, which is obviously part of their business. There's just uncertainty about everything to do with healthcare. So that's fair. However, I'd say $600 is still a pretty nice gain in this market for their price target. So I'm still there. I like it. I think management's phenomenal. I think they do have growth levers. And whether it goes from 650 to 600 on their view, just don't care.
Okay.